Wow, 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 wow. Welcome to this week's edition of Wall Street Winners, August 29th, 2022. Let's get right into it. Friday, nasty, nasty day. But we've told you. How many weeks have we been telling you that this bull market is over? Look at this purple predictor. We showed you the RSI being way overbought here. We told you fundamentally this was unsustainable. Seasonally, it's going lower. This Friday's price action was the confirmation. It was the death knell of this market. Bye-bye. See you later. Gotta be short. How about the Dow Jones? Finally, for the first time since July, we have selling pressure above buying pressure. Also, RSI way overbought. Slamorama. See you later, Dow Jones. NASDAQ. Oh my God. Purple predictor peaked all the way over almost 2 weeks before the price action did. Also, RSI overbought. See you later, NASDAQ. They're all going much lower. Now, seasonally, got to be neutral. Now, the utilities, this is interesting. We are in a seasonally bullish period. We got above there. I said last week, of course, I know that you've memorized everything I say every week. I said, well, if we can stay up here, I'll get long some Utes. Nope, see you later. Utes went back below the breakout level. So I'm not getting bullish on the Utes, but there's still a chance. Let's wait another week and we'll see. Here we see a major reason why I'm bearish. Follow the red line. That's been perfectly calling the market perfectly this year. Very, very weak price action coming up here, and generally weak price action till the end of October. So look for that. What happened? People took their money out of the stock market. They put them into bonds. You can see that right here as an asset allocation model says stock sold, bonds bought. When you take the liquidity out of the stock market, combine it with the Fed sucking money out by billions of dollars, what's left to support the market? No liquidity, no bull market. See you later. Riskicator. While all this is happening, we had seen this minor rally in risk taking, but no, they said, you know what, maybe we don't really want it. I just showed you the chart of the utilities. The utilities were hanging around the buy point there. They weren't really going down the way the general stock market did. That's an indication that the market doesn't want risk. What does that mean? That means they're going to go into Utes, consumer staples, big dividend paying stocks. Those are the only safe havens we're going to see for the next several months. Please, come on, write that down. Write that down. Global shares, Slamorama also. We're going to get short global shares this week. Gotta. Why? Because they're going lower. That's how we make money here. We've hammered on this the last few weeks, so I won't bother going into it. Go watch last week. All right, bonds, a little bit of strength here. I'm tempted to buy them. Why? Because we're going to see bonds move up, yields move down. Why? Because of flight to quality. People are going to get scared on this next leg down. We had that nice couple of month rally. Everybody thinks, oh, the bear market's over. We're back into the bull market. We could buy Bitcoin. We could buy those sexy, techy stocks. Time for Utes again. Time for consumer staples again. Time to crawl under your bed and pull the covers over your head. Okay? We're into the next bear leg. I think this one's going to be worse than the one we had in the first 6 months of the year. But if that happens, we should see bonds rally. But this rally so far, it's only 2 days long. I'll wait till next week. Our bond key factors starting to move lower. That means lower yields. But it's a mixed bag, so we'll sit on the sidelines. Been telling you now for a week or two, got to be long the dollar because yields, well, it's going to struggle. But I'm still long the dollar. I like being long the dollar. Why? Because every place else is worse off than the U.S. So money is coming into the United States. Inflation is worse overseas than here. For most countries, a couple are better than the U.S. But we're seeing things like 30%. Well, I mean, Turkey, 80% CPI. So, I mean, you know, they're a disaster. You can write them off as well. Your vacations to Istanbul are going to be very cheap next year. Gold. Why buy gold? Why buy gold when real interest rates are moving up? Makes it very expensive. Factor number 2, Indian rupee, very weak. That means that the price of gold is going up in rupee terms. Who cares about the Indian rupee? Indians do, and they account for 50% of the demand for gold every year. So if the Indians aren't buying gold, well, that's the end of gold. Boy, I'm really Mr. Cheerful this week, aren't I? Anyway, but our gold key indicators are also negativo. Crude oil, I think we're going to stabilize a little bit here. The supply is being choked off a little bit, but demand is going to start decreasing. But the purple predictor tells us the smart money's buying. I never fade the smart money. But I think the smart money's buying because of not a lot of demand, but because of a lack of supply. Now, this is being driven by the nat gas crisis that we're seeing in Europe. Nat gas is having a knock-on effect on crude oil. Nat gas, major bull market. That's why we're long nat gas stocks. Of course, we're making money. But crude oil will be dragged up a little bit, but the action's in nat gas. Bitcoin, see you later. Purple predictor, we talked about it last week. We finally got the crack on Friday. This is actually a little bit of Saturday's price action, but the crack was on Friday. Why? 100% correlated with the NASDAQ. Bitcoin, you're nothing special anymore.